crypto is hot. It may be hotter than ever. And one of the things that it needs to really fuel this growth is money. And money comes from a lot of different places. One of the key areas in technology that has been pretty much I think the catalyst for what we've seen in growth over the past 2 decades has been the VC community. So we thought, let's get into this a little bit deeper and really kind of understand kind of not only the ideas behind where venture capital is coming from, but also maybe how this might be the idea that's going to launch a huge set of new projects on the blockchain. So today joining me is Jalak Jobanputra, who is the founder and managing partner with a company by the name of Future Perfect Ventures, a VC firm all focused on crypto. Great to have you.
Well, thanks for having me. It's good to chat.
Jalak, let's get into a little about what Future Perfect does. Is it just crypto projects that you're really going after, blockchain tech? What's kind of the focus of your group?
So I launched the fund in 2014 around the thesis that blockchain technology was the next internet. Every 20 years or so, we've seen technology revolutions, starting with the PC. And if you're looking at, since the 1960s and 1950s, we had the PC that gave rise to hardware and software business models. Right. Then we moved into the 90s with the internet. And certainly the mobile connectivity, broadband connectivity gave rise to companies like Uber, and Airbnb and trillions and trillions of dollars of value. And so about 8 years ago, I was just looking around at this connectivity that we had kind of laid over the last 30 years through these prior technology waves. And I was really excited about the connectivity that existed around the world. And I felt like the next stage was going to be more peer-to-peer, that we're going to be able to connect without intermediaries. And as part of that exploration, I became interested in Bitcoin and then even more so in blockchain technology, which powers Bitcoin and powers all crypto. So we invest in crypto. We're big believers in crypto economic models, but we also believe that the underlying technology will be used in conjunction with the internet, with cloud computing, to create more efficient transmission of data.
Okay, so I think, when we look at the tech field, my background, Silicon Valley, computer science, spent many years in that industry and working with big companies like Microsoft and others, and a lot of development. And you're right. I think a lot of people recognize this as kind of the next evolution of where technology is moving. Blockchain obviously being one of the main catalysts for this potential, technology spur that we could be seeing happening right before our very eyes. A lot of people still don't recognize what it does, how it works, and even maybe what it can do for our society. But I think for those in the know, if you think about this back in 1995, 96, if you did the same thing to the internet at that time, it was pretty much the same thing. It was exactly the same scenario. So I'm kind of accustomed to this. It works well within, I think, the early adopters. When you look at the projects that are happening right now, is there one category that is really exciting you over others? Something that you could kind of look at? I mean, we've seen things like ICP, we've seen stuff like, World Mobile Token, all kinds of different, scenarios really jumping into the space. Is there anything that kind of is special right now that you're looking at?
Well, there's a lot, and I'm going to go back to that comparison to the internet. And I was actually a tech investment banker in 1995 when the Netscape IPO happened. Started investing out in the Valley. In '99, I was
my nemesis.
Yes, sorry.
Yeah, well, there's a
Intel
lot
Capital
behind that.
In the late 90s, where, I was kind of like, saw the boom and the bust out in the Valley, investing for the premier corporate, VC out there. And so, totally understand what you just said, right? Because the early days, people just didn't get it. I remember I was working with bankers, who weren't tech bankers in
Hmm.
'95, and they said, "Why would I use the internet? Why would I send an email when it's just quicker to pick up the phone and call someone?" And that was true. It was quicker to do that, and a lot of people have said that about Bitcoin or blockchain technology, that it takes longer, to complete a transaction. And that was true maybe about 8 years ago, in the early days of the Bitcoin blockchain. That's certainly evolved. It's getting much quicker to confirm transactions. It's getting cheaper to confirm transactions on different blockchains. And so that infrastructure layer is something we've seen a lot of
Hmm.
development in. So, right now, a lot there. You mentioned ICP. There are a bunch of new protocols emerging that say that they can handle more transactions on
Right.
chain. And when I say on chain, it's on this general ledger that can be verified instantaneously. But a lot of that is still unproven.
Yeah.
And but we've seen so much development just in the last 2 to 3 years on this front. And I'd say the pace of development is much faster than what we saw with the internet. And part of the reason why is this is open source technology. And
Right.
I mentioned that the internet laid all this groundwork for connectivity, mobile cell towers, and all of that connectivity enables blockchain technology to be developed much faster because you have developers working on this in real time globally.
Right.
So in terms of your question, we're excited, across the board. Financial services has been really the first place that's been the first sector that's starting to get disrupted by
Hmm.
blockchain technology. And one of the reasons I think that's true is, Bitcoin is really the first application of blockchain technology, and that is become a store of value, a new asset class, a way to transmit value. And so it's just inherently in the financial services industry that we've seen the first use cases. And then
Right.
we've seen a number of companies develop lending platforms on Ethereum, and the concept of decentralized finance. So you no longer need banks to borrow, lend. You can actually start to determine what your own risk reward profile is. And that to me is one of the most exciting parts of what's happening right now. If you look at the internet, they allowed personalization of, I see ads that are supposedly relevant to me, right, because of the data that I'm providing. I am able to kind of personalize my experience on the web. We
Right.
don't have that kind of personal experience in financial services. And I believe
Hmm.
that what's happening in crypto is going to enable that. And that's going to happen several years from now. But
Right.
we're laying the groundwork for that, where, I can decide, I need to borrow money today, and I'm willing to pay a premium to close that loan within 5 minutes. If I'm willing to wait till tomorrow, then I'll be willing to take a lower interest rate, and then I can be
Sure.
matched with lenders accordingly, and without any banks involved. And
Yeah.
so I'm really excited about that. I'm excited about what's happening in the creator economy.
Hmm.
I got into this sector because I was born in Kenya. I've spent a lot of time in the emerging markets. I've seen the gaps that have been left in terms of financial services, in terms of education, people being able to utilize their talents to make a living. And so if you look at NFTs and the ability to kind of create art, sell it, and also verify it and track provenance on blockchains, and then eventually share in any resales that happen of that art, it becomes really transformative at both like a macro level, and we're seeing Sotheby's and Christie's get very involved, but also at the
Yep.
individual creator level. People will be able to make a living in a way that they haven't been
Sure.
able to before.
Yeah, I think that, this has opened up a whole new layer. I think the interesting thing to me, we study this, feels like 24/7. We're reporting and talking to CEOs, which we get, somewhat kind of the inside scoop on what their strategies are and how they're moving forward. And the things that still, to me, that really surprised me, one is the rapid speed of adoption within the tech community. So a lot of developers moving and jumping into blockchain with Solidity and or with Python, some of the core architectures and programming languages that are being utilized. I've been impressed to see that kind of growth, because that's what we're going to need, especially with a lot of these projects. One thing though, for our channel, there's usually two viewers here. You have, the average tech enthusiast who's investing in cryptocurrency and different projects that wants to know where the next move is. And then you have the project leads that are here looking at some of the CEOs and founders and people like that we get on the show. And there's two different questions I want to kind of run at you, because there's a couple of different things I think that are interesting to our community, and we get so much feedback from them on these topics. First thing is, when you look at project leads, people that are trying to either one, build a blockchain product or project, or jump into something that is going to generate, whether it's a tokenization, or they're trying to develop something else, maybe it's more of an infrastructure play, like a World Mobile Token. We just had those people on here recently. I was very interested in what they were doing. Very creative in terms of this grid network they're trying to use for telecommunications. But when you're looking at projects like that, do you see more opportunity from a VC standpoint to the projects that are solving real world problems, or to the projects are really going after tokenization and more of the ICO approach?
Well, I think it's both, frankly, and that's really exciting as an investor right now, as someone who's been a VC for a while and seen the industry undergo some change.
Yeah.
It's taken less money to build companies. The internet
Right.
and networks enable that, and the advances we've seen in technology have allowed software development. AWS was transformative, and so all of that has transformed what companies can, how many people can start companies, and
Right.
kind of the proof points you can get with less money. And crypto just turbocharges that. And so, we're seeing, and I believe tokenization is going to be the business model of the future.
Yeah.
So using crypto economic incentives, we're seeing this with DAOs right now. Right. Where there are collectives being formed to invest in companies, to create companies, and then potentially dissolve companies, and so that is going to change venture capital, and
Right.
we are very much tracking that and staying ahead of that by investing and participating in a number of these. However, change takes time, and we still have a lot of infrastructure that needs to be built out. That's going to take capital that look like they're more traditional venture equity investments. And so when I talk to entrepreneurs, and we do the gamut because we focus on the sector 24/7. So, I'm interested in projects that are solving immediate pain points by maybe using hybrid technology. I mean, we have a company called Vendia that's on the West Coast. They just raised their Series A just months after we seeded them, and they are using blockchain networks to transfer data between enterprise, between cloud platforms that different enterprises use. So, example, airline tickets. Because of all the code sharing, it often takes months to settle those transactions between airlines. Right. Using Vendia's technology, it's gone down to hours.
Instantaneous. Yeah.
And so So that's one example of this technology being used right away. Now, is that completely decentralized? Is it, no, it's not. But there's an enterprise software pain point that's being solved through
Right.
blockchain tech. And then on the other extreme, I mean, we're investors in companies like Dot and Graph.
Yep.
And Graph came out of my specific thesis around this infrastructure build out, that you have the protocol layer, you have the applications being built, but there was very little of this middleware. You can call it middleware, you can call it layer two, kind of
Right.
being built about a year ago, right? And so we invested in the Graph. We were very impressed with the team and the fact that they would allow developers to be able to develop applications that function across different blockchains, and we believe in a multi-blockchain world. Now, that and the token has been doing quite well. I mean, it's been volatile, like every token has been this year. But we invested before the token was trading. We did the same diligence we do with an equity investment. We got to know the team, and so that's the way we invest. And so we believe there's opportunity, throughout, that some of these are going to take longer, to materialize in
Right.
terms of usage. And others are, generating significant revenue right away.
Right, exactly. So I think that's the question is, when you look at where this market is moving, is this the traditional play for a VC pure play kind of model where, you look at the founder, you look at the mission and the vision of the product or the project, and then you make a bet, and it's the traditional, seed funding, before you get into maybe your A and beyond rounds. Is that the kind of the model that's being taken place now, being implemented, or are you guys seeing new creative models for ventures and other investment instruments, whether it's angel or different types of private equity or family office, et cetera, to where they're just going in and saying, listen, we know this is going to be hot, and it's kind of like what was happening in the early 2000s, where we just saw money coming at these companies just literally in wheelbarrows. Trying to solve problems, which is really, I mean, that's when the Facebooks were born, the Twitters were
Yep.
born, in terms of the ideas. Is that kind of the same structure? Do you see it kind of still old school VC? I don't want to call that old school, but in the tech world, if you've been around Silicon Valley, that's the old way of doing things. Is that still going to be the process for these future blockchain startups?
I don't believe so.
Okay, good.
And
So that's
that's
kind of what
why,
I think.
yeah, that's why it's exciting to be part of this whole evolution, because it's not only the technology that is changing, it's not only new business models emerging for these companies, there's going to be new business models around funding these companies.
Right.
And one of the reasons I launched Future Perfect Ventures was that I thought venture was very antiquated in the way, frankly, most VCs thought about the world. Early stage investing was still a very local business. I went out with the thesis that we had to start investing globally from the earliest stages. That was actually a very radical notion in 2013. The fact that technology, a lot of companies were not going to necessarily need as much money as they had previously. And we've already seen that, as I alluded to. But I mean, if you think about a company raising a seed round and then being able to issue tokens to their users, to developers, to a broader base, and fund their development that way, look at what Ethereum did, right? And that I believe is going to be the model of the future, and the ability for and it's not only the participants in a particular network or a company being able to have a stake and contribute. It's investors at a micro level. So that's what DAOs really are about. People investing hundreds of dollars, thousands of dollars. It's the same concept with Bitcoin. You don't have to own a whole Bitcoin. I mean, a lot of people have a hard time wrapping their arms around that. But private equity, private funding is going to transform in the same way. And we know that we're going to be disrupting ourselves. I think we're going to have to figure out the value or continue. I believe we add value by bringing our network to the table. But the investors that don't are going to be left behind. And I also believe that I always thought that concept of maximizing ownership on the part of the VC actually ironically left money on the table because if you're crowding out other investors that can actually add value and create a bigger pie, I'd rather have a smaller piece of that pie but have a bigger pie. And we're so much about impact. I mean, yes, we are about returning capital to our investors, but frankly, I'm not worried about that. I believe in making that pie as big, as impactful as possible and supporting the entrepreneur. And I think the way venture kind of evolved or was stuck was working against that, and I haven't believed necessarily in maximizing ownership, and that was another radical notion. But I also want to make sure that the entrepreneur is supported with the right folks around the table, and so that's where we're seeing everything evolve, and that was very much part of my thesis 8 years ago, and in terms of how venture needed to change. So we're seeing that happen.
Yeah, have you seen? Well, you mentioned DAO. Have you obviously? Are you talking about DAO Maker? Is that
DAO?
Just one of the projects?
DAOs, decentralized autonomous organizations that these syndicates that are popping up of individuals that are decentralized and investing.
Have you seen what are your thoughts, or have you seen what Maker is doing with DAO Maker, which is this decentralized fractional investing platform?
Yeah, I mean, I think again, I think we're seeing so much innovation that is the future. Stable coins. I remember a few years ago people were dismissing the concept of stable coins also,
right?
Because and what we've seen is that they've been an essential part of crypto adoption, to create the on and the off ramps. And now they're getting, into the mainstream with I mean, we have a neobank in our portfolio that always had a crypto strategy, but it was kind of waiting for the right time. They just announced a deal with Compound to be able to offer their user base the 4% interest that Compound is now rolling out. And so that was a little bit off topic so the DAOs, I believe, are the same thing, where it seemed like they were a little bit further off, but this year has been a year when we have seen mass participation in crypto, and this pent up demand of participation and fractionalization enables that participation.
Yeah, for sure. I like the fact that, and I wanted to jump to a few news stories here. One, just to show the audience kind of the array of VCs that are moving into this space to create some validity here on this, and then kind of jump in. Here's a piece on, I think it was, looks like this is CoinDesk. So Visa, PayPal, crypto VC, blockchain, they go into a $300 million fund. Then you have a piece on Tim Draper, who's essentially just really jumped all in on this. And then you have the Andreessen Horowitz, their new Crypto Fund 3, which looks like it's a $2.2 billion fund, continuing to look at investing in this. When you look at and these are all old school names. These are all, traditional Silicon Valley VC operations. Do you see them waking up to the blockchain universe, or do you see them trying to implement old school tactics to a new school model?
Well, I think most of them are now realizing that things are changing. Look, there's still going to be plenty of kind of these old school deals, these equity deals. I mean, we have a very active, IPO market right now, and so that model is still working,
Hmm.
and I don't think it's necessarily an easy mindset transition to make. And
Right.
we
Yeah.
actually have a number of VCs that are LPs in our fund.
Oh, okay.
And that is a reason why, I think they realize that, especially at the earliest stages, and we are in also the earliest stages of what's happening in crypto and the disruption, that they're not kind of ready to go all in, but they know that they need to track it, and they want to work with managers that focus on it, 24/7. So,
Exactly.
so, so we're, I don't believe that model is gone. And if you talk to most LPs, most fund of funds, they still look at investing through that lens.
Right.
I'm looking further ahead,
Hmm.
and because I've been so deep in it, in crypto for the last 8 years, I've seen the rapid change happen. And when
Exactly.
I started the fund, most of my VC colleagues, at firms around the world, thought I was crazy. They just, they wouldn't even look at a company in the sector. Now, we've seen exits, we've seen this rapid adoption, we've seen hedge funds investing in Bitcoin and ETH, and so it's very different in terms of how, even within the tech and VC world, how it's being taken more seriously.
Yeah. How does so in the modern day model for whether it's a project lead that's looking to jumpstart a blockchain project, or maybe investors to where they're trying to figure out, what channels they should be looking to. What is a typical, like if you think about this in the new snapshot of more innovative VCs like yourself who are really kind of going in this direction, how do you structure a deal today if it's not based on valuation and percentage of cap table ownership and the traditional old school model VC? What is the new architecture of a deal today?
That's a great question, and one that's kind of evolving in a real time basis. And we started kind of experimenting with different models, back in 2016, 17, especially
Yeah.
post ETH ICO, right when we realized that tokenization was going to be here, and so I would say, look, even when we do an equity deal, we look at the potential tokenization of the company. Now
Right.
that can take different forms. You can actually just tokenize the equity, right, and
Sure.
and stop there, and so you're just being able to trade that equity on a ledger. One step beyond that is, well, even with a private company, it can start to offer dividends.
Right.
Something that wasn't as easy to do before,
Sure.
or wasn't really feasible before. And so you can start to build really creative structures in, but the reality is we haven't seen this happen. So when we put together terms, we kind of allow for the ability to participate in any token structures that may evolve from the equity investment.
Ah,
And
okay.
so and I believe that there's going to be so many different things we see. I mean, I mentioned the dividends. I mean, once you start adding programmability into any equity, right? And I think it's going to happen in the private markets, um, uh, uh, first in terms of some of this programmability. And so we want to be able to participate in that. It's we're taking that early risk, and working with the entrepreneur. So it's less about the ownership, but being able to participate and we get very involved in thinking. I mean, we're the eyes and ears for the company. We,
Right. Yeah.
see hundreds of deals, every month, and so that's where we also add value back to the entrepreneur about thinking about what they can do, what they can tokenize, what the regulations will allow in different jurisdictions, and this is all new, and so that's. So yeah, and the structures are going to continue to evolve, but we just want to make sure that we can participate.
I like the fact that, because that seems like it's a living, breathing, element of how a VC play goes into it, which is one, very creative. So I think and it's perfect, because then everybody wins, because you're working on, kind of a unified front of, hey, if we do tokenize equity, or maybe we spin out a new model within the blockchain and you can tokenize the service, or if you actually build a token concept and you go put it on an ICO and put it up on the market. So that definitely starts to play into, and I can see the phases develop, especially in the blockchain projects that we've looked at. You can kind of see those phases starting to go.
Yeah.
We have seen a lot of projects like, I keep going back to Maker. I'm so impressed with what they've been able to do. We just did a video on kind of what we call market movers that kind of explain how their infrastructure starts to work. And I've been impressed with the number of projects that they've put out or worked with that have really started to evolve. So that's kind of, I think, to your point exactly, is that you, as a VC, man, you don't really limit yourself to that little small, Pop-Tart that started in the beginning. Instead, you've got this huge, beautiful French croissant, that is much different.
You're gonna make me hungry. I believe that it's all about aligning incentives too, and
right.
And not, again, going back to, it's not about control. It's about the overall opportunity, and
sure.
And I just find that we can align through crypto. We can align incentives in a much better way with all stakeholders, including customers, developers, all participants, and investors.
With this sector, one thing that I have seen is, you have a lot of very innovative people. In some cases, maybe they're brand new engineers that, have barely started. If you think of, the founder of Ethereum, if you look at Charles over at Cardano, you can look at, we got John Wu over at AVAX and Avalanche. Different layers, and we've seen, and I don't want to put this in age zones, but the point is we're seeing a lot of quite a wide range of people in the space around this. And what I have found is that how do you approach, especially from the legal standpoint, because this, to me, if you look at what the SEC, because the SEC obviously has a magnifying glass on this whole sector right now, but if you look at the types of attorneys and legal analysts and people that you can put on a team to help you kind of get in the right place for launching projects. Are you guys going in to that level in terms of kind of helping these entrepreneurs and startups really understand that? Because I see a lot of problems down the road if you don't have that in place.
Absolutely. We have been from the beginning ultra focused on regulatory landscape, and also engaging with regulators around the world to make sure that they understand the technology, or try to understand the technology, and don't over-regulate it kind of out of fear. And so that's been a big part of what I've done over the last 8 years, and why a lot of entrepreneurs want to work with us. And if you look at the way Andreessen has also hired with their latest fund too, they have brought in a number of policy folks, and so I think that shows that this is important. When it was small, when the sector was small, everyone thought they could get away with whatever they wanted. Now, we're a fiduciary. I'm a fiduciary to my investors, so we've always been really careful on that front. But the notion was that if it ever grows as big as we want it all to, it's going to get the attention of regulators.
For sure.
The great thing is that I believe regulators realize this, have realized this is not going away.
Yeah.
When India was talking about a ban, I knew they weren't going to ban it. No country. They can temporarily put a stop on activity, but no country has been able to ban crypto for any extended period of time. But it will be regulated. And the bigger it gets and the more impact it has, the more regulated it will be. And it's up to us as an industry to make sure that the regulation makes sense. And if we really care, if regulators really want to protect people, if they really want to create opportunity, if governments want to create opportunity for people, then they should be supportive of the technology.
Yeah.
Obviously, weed out the bad actors, but this technology can grow global GDP. And so we'll find out. We'll find out which governments and regulators really care about their constituents and which ones are just in it for their own power.
Yeah, well, obviously we've seen the scenario with China, which has been the one country that has moved away from blockchain and crypto in general. And I think that whether we see that across, I think obviously that has a much more geopolitical play than just cryptocurrency. This is all about the digital yuan and where they want to go with it. So it's going to be interesting to watch. But India, I'm watching very closely, the Middle East especially. Obviously, we'll see things in Europe, I think in the UK. And it'll be interesting to see what happens with the US and kind of how we move to the digital dollar, which I think is coming. It's just a matter of time to see how that will play out. But I think a lot of people who get confused about cryptocurrency and kind of blockchain in general think that it's all tied to just money. And the reality is that, it's really just like a lot of people need to understand. This is like the internet next generation, so be thinking about it that way from a decentralized standpoint. All right, so can you give us last point, can you give us any areas that for our investor group, so we've talked about the founders, kind of how to prepare for and get programs going. But for the investor side, has there been any one category, and I talked earlier, kind of pointed at this, but you got to give us something. What one category or two categories are you feeling? Obviously, don't do the easy one like DeFi. Come on. We got to have something that's really juicy, that you feel like, you maybe want to kind of look in this area. Go research under this block.
Well, I am looking at that middleware layer.
Okay.
That I just mentioned. So, and even if you look at DeFi, even if you look at NFTs, there's a missing layer of infrastructure around data analytics, right?
Right.
Like figuring out, from coming from Wall Street, right? It's like you want to be able to value companies, get the right data and the comps, and this all of this activity has grown so fast that those tools haven't yet been built or are just being built to the point where I have a team of developers that are building those tools in-house for us because I haven't, and we may end up spinning some of that out at some point because as many companies as I see, I haven't seen that level of analytics yet. So
interesting.
So I think if you look at different categories of crypto as potentially different stocks, and then you think about all the infrastructure that exists around all of existing financial services or any asset, that's the analytics behind it, then that allow you to make smart investment decisions or then actually create new products. And AI connected with this is, this is out there. but if you start to take some of those analytics and then use AI to build new types of products and tools, that becomes really interesting.
Yeah, now you're talking our language here on TechPath, because that's, our show is built on cryptocurrency, blockchain. We do a lot in the EV space, but autonomy, AI, robotics is really kind of our wheelhouse of all the things we get into. And I see all of this technology kind of merging into one major superhighway to where it starts to intersect, which is the tech path. That's the tech path. Anyway, Jalak, it's been great having you on the show today. Thank you so much for your insights. It's awesome. Good luck to what you guys are doing over there at Future Perfect for sure.
Thank you. It was great talking to you.
All right. If you guys are hopefully you're tuned in right here on the podcast. Make sure and give us some stars over there on Spotify. Follow us. If you're on iTunes, of course, you got to use the little star mechanism. And for those of you maybe listening in on the Next Generation podcast listeners, let us know if you think we should jump to blockchain podcasting, because we've talked about that before with Podcasting 2.0. And my friend Adam Curry, he keeps trying to get me to do that. We may end up doing that soon. So be on the lookout for that. And of course, if you're here on YouTube, the number one thing you can do is subscribe to the channel. Share this video with someone who you know maybe needs a little bit of insight, not only in cryptocurrency and blockchain, but maybe on technology that's going to drive the next 100 years of our society. That's what TechPath is about. If you want to have an idea for a show, it's just producer@reverendnetworks.com or hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.